Hello, Gina. You hear me? Just want to make sure I hear you before we go get into it.
Okay, I cannot see you. Is that normal?
Yeah, that's normal. But I hear you perfectly, and we can pretty much get ready to go if you want.
Okay, so we're just gonna have a friendly conversation, right? Then you ask me some
Absolutely.
questions, and I will ask you some questions. Okay.
Yeah, and we'll go. We'll get right through it really quickly, and
Can I also ask you like some things about you, what you do, and because my audience will be in Florida, and I know you
mhm.
guys are great in loans, so I would
Yeah.
love to share this video and
Oh,
maybe I
absolutely.
can start pushing some of my agents to use you.
Okay,
Mhm.
absolutely. I appreciate that.
Perfect.
Okay. So we're pretty much live. Did you get the PDF I sent you
Let me check. Just now or before?
before? I can send it to you again if you like.
Okay.
I sent it to you now, but it's general. It's just a general outline of what we're gonna do today and talk about with some questions that you recommended, I think, and then some
Okay.
questions that I found out as well.
Sure. The email I have, it has, okay, you're sending it again.
There it is.
Okay, let me check.
Let me know when you're ready. We'll go. We'll pull it ourselves on the screen and we'll go completely live for everyone.
Okay. Talk to
Just
me
take a
about.
quick look at it
Okay.
and then kind of a rundown of how I do
Mhm.
it usually.
Okay. Perfect.
Okay. Yeah,
Yeah.
we can skip anyone that you don't want, but it's pretty much a little breakdown.
Yeah.
All right.
Yeah. No, it's
All
fine.
right. So, welcome everyone to another live stream with me, Jose Torres, from First Alliance Home Mortgage. I'm a mortgage loan originator working in the state of New Jersey, and pretty soon I'm actually going to be working in Florida. So this a new update for me today. I have a great guest from New World Title, Gina Salcedo. I'll let her kind of introduce herself and tell her a little bit about what she does and who she is.
Thank you, Jose. Thank you so much for giving me the opportunity to be part of this. So my name is Gina Salcedo. I'm a title agent for 16 years. I'm part of New World Title. We're the largest title company in the state of Florida. And right now we have 3 locations, close to opening our 4th location in New Jersey. We're also licensed in New York. So New York, New Jersey, Florida, Texas, Pennsylvania will be very soon. And that's what we do. We do title insurance. We protect the buyer and the lender, and we will go over those details in a minute. I know you're going to have some questions. So thank you so
Okay.
much.
Great. All right. So I always like to ask this question before we really get started into the nuts and bolts of everything. What kind of got you involved in the business? How did you land in this business, and what's like your origin story for your real estate career and what you're doing now?
Okay, so let me tell you a little bit about me. I came from Colombia about 22 years ago. And right after I graduated from high school, I started working for a title company as a processor. Then I went to school for a degree in finance and economics, but I stayed doing title. And it's been 16, 17 years for me being a title agent. Mhm. So that's how I started in real estate. I cannot hear you.
Okay. So yeah, tell me a little bit specifically more about New World Title, the history of your company, and a little bit more about what you guys are and what you guys bring to the table.
Sure. Okay. So New World Title. The company started about 10, 12 years ago. Okay. We started in Miami. Okay. That was our first office in Miami. It started as a small title company one of the owners, Rudy Hernandez, he was doing everything himself. Okay, so he was processing, he was closing, and then little by little the company started growing. Okay, now we have over 25 locations. So it's very inspiring, a great success story. And I think what it makes us different is that not only we provide great service to the buyer and to the lenders in terms of title insurance, but also we care about the agents as well, the real estate agents, the mortgage companies. So we're more about creating powerful, relationships with the other professionals in the industry. So it's been years of success, and it's really, thanks to all the real estate companies, all the mortgage companies that support us in
Absolutely.
this industry.
And you guys are great with that, and the network building and the team building stuff, and we appreciate that. We'll get a little bit more into more events that you guys are planning, because I know you got some big things coming up. But we'll continue with some informational stuff for the people who are not, in the business, who want to learn a little bit more. New world titles in the name of your company. What is a title, and what is the role of a title company?
Okay, so let me tell you. So when you buy a property, okay, when you buy a property, you need title insurance. So title insurance, what really is as soon as you have an executed contract to purchase a property, we're going to go back to the public records and we're going to search since the property was built until the date of the closing. We're going to look for any mortgages, liens, judgments, violations, anything, any issues on the property that we can find. If we find anything on the property or any open mortgages, we will make sure everything gets paid at closing. So in other words, it's a clean title. We give you a clean title for the property you're purchasing. And not only when you're purchasing a property, you need title insurance, you will also need title insurance when you're refinancing. Because as part of the process, we give two types of policies. The owner's policy, which is an owner's title insurance policy that we provide to the owner. And we also provide a lender's policy. And when the buyer is financing, it's mandatory for the buyer to obtain lender's title insurance. Why? Because the lender will not give you a loan until they make sure that they're the first company or person in the chain of title. So they want to make sure they're the first lien position on your property. In other words, if they have to foreclose on your property, they want to make sure that they're the first ones that get paid. So it's mandatory when you're financing a property, but even if a buyer is buying cash, you should get title insurance on your property, because you're buying a property, you're investing all your money, all your cash, and then you don't have the information of what's owed on that property. Especially, Jose, there is something I wanted to mention, that public records are behind a few weeks. So if you're buying a property and the owner of the property, let's say you have a closing today and the owner went last week and obtained a line of credit with any bank out there. Okay, it's going to take a few weeks for that mortgage to be recorded and reflected on the public records. So unless you're closing on your purchase with title insurance, you're not protected. You will have to go and take legal action against that seller, and that's going to cost a lot of money, and it's going to be a long process.
Great, you covered a lot there in one bite. But no, that information is great, because I was gonna ask you about the whole refinancing. Yeah, so, and also, mentioning the cash. If you buy cash, you should also be protected there. Okay, great. So another question I get all the time, when I meet first time buyers, especially, is they always ask me, what is escrow? What is escrow, and what's that about? I mean, you guys, I'm sure, deal with that on the regular. Maybe explain that, the concept of escrow and why it's in place, and kind of the
Sure.
idea, the basis behind it.
Sure. Okay. So escrow. So basically, as a title company, we have two roles. One is providing title insurance, which we already, talked about. And our second role is to be an escrow agent for transactions. So when you buy in a property, usually the contracts have a good faith deposit. That deposit doesn't go to the seller. It doesn't go to the bank. It doesn't go to the real estate company that is representing the buyer. That deposit goes to a title company or an attorney who has an escrow account. So that money will be deposited in our escrow account, okay? And then at closing, we will just credit that money back to the buyer as part as the closing cost for the transaction, okay? So the money will stay in our account. And one of the questions I get asked a lot about the deposit is some buyers think that they will just write a check for $10,000 as a deposit, and then they will give it to us, and they think we're just going to hold the physical check in our office. And a lot of times, those checks don't have any funds because the buyer thinks it's just giving a check and the title company will hold the physical check in our office. And it doesn't work like that. Once a title company gets a check for the deposit, we will deposit the check within 24 hours in our escrow account. So for any buyers out there that are listening, we need to make sure you have enough funds in that account to cover the deposit because we will deposit that check.
And that's all part of the good faith deposit and all that. You guys are essentially responsible for dispersing the funds at the end of the transaction. So maybe you are a closer. That's what you do for a living, essentially. Maybe describe the last phase of the mortgage transaction, because I go through the whole process, but you guys come in and you slam and dunk it at the end, and kind of explain how that works. Combining all what you just said together.
Right. So not only we're the escrow company for the buyer's deposit, but also we are, the middle part in the transaction. So for example, in refinances, the lender that is lending you the funds to refinance your property, the lender is not going to send those funds directly to your account. They will send it to the title company, to our escrow account. And then from our escrow account, we will disperse to everyone involved in the transaction. So if you're refinancing, let's say you're refinancing to better the terms of your loan, which I know Jose is great at, then Jose, the lender is going to send us the money. We're going to pay off the core. We're going to pay off any payoffs that you have, any current mortgage payoff, and then we're going to finish the transaction like that. So everything that is involved with funds, it will come to the title company, and then we will make sure we disperse to the parties involved.
Got it. Yeah. Recently, I've had a transaction where the gentleman did a cash out refinance, and he was using some of the funds for debt consolidation. He wanted to pay off on his cars, wanted to pay off on his son's student loans. So he pulled out cash, and then I was at his closing, and the title agent came in and did exactly that, what you said, disperse the funds. They had checks written out for every account specifically. So that is another option if you want to refinance. You can cash out and use some of those funds for other things, maybe building your home or redoing parts of it, or just paying off debt. But yeah, that's a great point.
Because credit cards interest is what, 17, 20% sometimes.
Yeah.
And then absolutely. What are the rates right now for refinancing?
Refinance rates anywhere from 3 to 4, depending on what you're trying to do, depending on your credit. But yeah, it's way more competitive to go and get a cash out than to consolidate your debt, to just even going to get a personal loan. That's up in the 5 to 7. So absolutely. Yeah. Okay. So what, in terms of your company and your expansion, I know you guys recently moved up to Jersey and you're expanding. Is there any other regions, or talk to me a little bit about what the future plans of New World Title? Because I know you guys have some big events going on, so maybe touch upon that. And I know you had some questions for me, but I wanted to finish up on your company, because you guys are. I seen a meme the other day. You didn't really buy a house unless I seen New World Title logo somewhere in the background. You guys are all over the place, and it's a great thing to see. So yeah, talk about a little bit more about what's going on with your company and its future for it.
Thank you so much. Okay, so about New World Title. So there is a lot of things that make us different, and that's why we're growing, okay, at this fast pace that we're going. And title companies usually have 1 or 2 underwriters, Okay, so think of a title company as a title agency. Okay, but there are big underwriters, national underwriters that will underwrite the title policies. A lot of title companies only have one or two underwriters, okay, because they don't have the volume to have more. In New World Title, we have about 7 underwriters. And why is that important? Okay, first, because same thing that works with lending. Okay, sometimes for a buyer, they're able to get a loan at one bank, but another bank will deny that loan. And that's because there are different guidelines and there are different underwriters. So same thing with title insurance. So if we have these multiple underwriters that we can use, some of them will approve certain things that others cannot approve. So that's really important. Example, closings. Okay, right now with international sellers and even international buyers, some of our underwriters will approve that a seller can sign outside of the United States via RUN. RUN means remote online notarization. And that means that a seller that is in a different country, it can be Canada, Brazil, Colombia, any country, okay? They can just go online in a notary session online. They can notarize, we can notarize their documents in front of a camera. We don't even need originals back. There is no need to go to the embassy as before, because before, if you were selling a property or buying a property, if you were in the United States, the only way to do it was to make an appointment with the U.S. consulate in their country, wait months sometimes for an appointment, weeks for an appointment, pay high fees for the U.S. consulate to notarize those documents, and then we had to wait for originals to come back. So we eliminate all of that right now, and we offer online notarization. Okay, and it's completely legal, it's approved, and it saves a lot of time and money to our customers. So that's one of our advantages. So we try to innovate, in everything we do. So we have multiple underwriters. Our closings, we try to make them as special as we can. So we will have presents for the buyers. We will have, champagne. We really offer a nice experience for buyers buying, their homes or their investments. What else? We're very big in networking. Okay, I know now with the pandemic we had to stop a little bit, but we're big on events. We love to bring all professionals in the real estate industry together. I know we did recently one in New Jersey, and we're planning some more. Um,
I was at the boat party, the all white boat party. It was a great event. It
Thank
was
you.
for a good cause, and we all had a great time. There was a couple people from my company there, so we definitely appreciate the invite and look forward to the next one.
Thank you so much. Thank you so much for coming in for supporting us since day one. We really appreciate it.
Absolutely.
Mhm.
Okay. So I had somebody text me that's watching. They go, okay, so money talks always. How does pricing work in your industry? What's a normal an idea of what a title service would cost a buyer in their process for their home?
Sure. Okay. So title insurance, we make money out of two fees in title insurance. Okay, is the title insurance premium, which is the same in every title company you use. Okay, because that goes based on the sales price for the property, or in refinances it goes based on the loan amount. Okay, so if you're shopping around for a title company, you need to know that title companies, as far as the title insurance premium, it's exactly the same in every title company. Okay, and the cost is, it's not expensive, is $575 for every $100,000. Okay, so if you're buying a property, $300,000 property, it changes after the 100,000. It's a formula, so after 100,000 it goes to $5 per 1,000. But just to have an idea, if we're buying a $300,000 property, or you're refinancing, title insurance is about $1,300, $1,400, and it's something you just pay once. You pay it at closing, And again, it protects you for anything since the property was built until the date of the closing. So if you buy your property and then 2 years later, someone comes knocking on your door saying, well, I have an interest in this property, uh, you have your title insurance policy that you can make a claim on. Or if you get a letter from a bank saying, I'm sorry, Mr. Buyer, we did a loan on this property and there is a mortgage for $100,000 on this property, you have the peace of mind of saying, hold on, I have my title insurance policy and I'm protected.
Gotcha. And just want to add from the mortgage side, if you're actually in the process and maybe you have a pre-approval letter already, those fees that she just mentioned, the title service fee, are usually listed in the good faith estimate. If they're not, they're supposed to be. And that's a service you can pick. So if you're, if you see there, maybe the estimate is high from where Gina's saying, maybe you need to call Gina up and say, hey, this is what I was estimated. Maybe you can help me out on the fees there, because that is a service that you can go and pick yourself. It's not a service that's attached to any transaction or lender directly. You can pick your own title service company, and that should be listed in the loan estimate. Just want to give that up.
Thank you. Yeah. So there will be, so I said there are two fees. So one is the title insurance premium, and then the other fee is a closing fee. Okay. In Florida is a little bit more expensive than in New Jersey. In Florida, we charge $8.95 for the closing fee. In New Jersey, we charge $4.95 for the closing fee. So it's just those two fees, title insurance and the closing fee. The closing fee will include, preparing closing documents, notarizing the documents, coordinating the transaction with the lender, dispersing to everyone involved in the transaction.
Got it. Mm-hmm. So yeah, again, those fees always will be listed and should be listed if you're going through that process now. I know some of my clients may be watching, but you should see that there. We have those estimates, and if you're working with me, you're probably going to end up at a New World Title office when you close. Trust me. But we'll continue with any other things you want to add or contribute to the segment. You covered a lot, and you're sharp, so you cover a lot of things at once, and that's great. And we have some good bits here. But anything else that maybe you think that you get asked a lot normally when you talk to borrowers or anyone else in the business?
Yes. So when you're purchasing a property, you get your title insurance policy. Okay. The title insurance policy is not something you get at the closing table. Okay. The title insurance policy, you will get it after in the mail. And the reason why is because at closing, we will give you your warranty deed, which is the title for the property. We will keep the original warranty deed. We will get it recorded in the county public records. And once the records are updated, that's when we prepare the final title insurance policy, and we will mail it to you with the original title. Okay. Now, that owner's title insurance policy is very important to keep, because when you're refinancing in the future, okay, if you want to better the terms of your loan, or if you want to stop paying mortgage insurance, so there is a lot of reasons why you will refinance a property in the future. With your title insurance policy, okay, we will give you a great discount on the lender's policy, because when you're refinancing, we're not going to give you another owner's policy. Owner's policy, it's only when you purchase your property. However, the new lender is going to make you get title insurance for the lender, because they want to make sure there is nothing wrong on the title. There is no issues, there is no violations, judgments, liens on the chain of title since you purchased the property to the date of the new closing. Okay, so that's important to keep. Your owner's title insurance policy when you purchase a property will help you save a lot of money on title when you refinance a property.
And from the financial side, the reason lenders do that is obviously is risk. They want to protect themselves. And so they want to make sure, let's say, for example, tax liens. Let's say they can't collect the mortgage. They need to recoup the money they contributed to this property. Well, they need to resell it. They can't resell it if there's a tax lien attached to it. Then they're in the loss, because now they have to pay the tax lien, whatever that is already a loss. So it's just, for them, it's bad business. So that's why they have these these kind of procedures in place to protect themselves. And we always say the bank always wins. They're trying to assure that they will win at the end in terms of the property. They have to make the smart decision. Because I always tell my borrowers, you're making $2,000 mortgage payments, for example, but you're borrowing $400,000, and they're giving that to you on the basis of paper, and just so it's risk, and they want to protect themselves,
Of course,
just for the
of course.
financial side of it. Okay, so we got into price, we got into a little bit of everything. Is there anything last? Maybe I haven't had any comments or anybody come in. If anybody wants to comment now, we're all busy. We got lives to continue, but I want to get as much as we can while we have you on, Gina.
Thank you.
Give it like maybe a minute, and we'll see if anybody asks anything.
Sure.
Okay.
So are you seeing a lot of refinances, Jose, right now? Are interest rates still good to refinance?
Interest rates are still very good, and I'm seeing a lot of refinances. I have more refinances in my pipeline than I have purchases, but I see a tipping point with that as well. That's kind of changing a little bit now. This storm puts everything in a loop up here in New Jersey because a lot of damage we got up here now with the storm. But interest rates are still very competitive, very low. So refinances are still in play. I'm doing one for family, so that's still huge for our industry. A lot of us are surviving off of refis, to be honest with you.
Right. Yeah, we do see a lot of refinances right now, and there's low inventory for property almost, in every state right now. So
that's why I think this storm is huge, because a lot of properties are going to need work with the price of lumber the way it is. It's going to be interesting to watch. Maybe the rates will go even down lower now because they want to up activity now since everybody took a hit. I have neighbors that have substantial damage on their properties, and it's getting tough. And they were thinking about refinances, and now they have to think, oh, should I get a cash out to fix this? It's a mess up here with the storm right now. So predicting rates, I think they might go lower now. Who knows? Yeah, it could be because, like I said, there's a lot of damage up here, and the whole East Coast got hit pretty bad. So we already had a problem with inventory. With this much damage now, even worse. I think to stay competitive, rates will stay where they're at or go lower possibly, I think. People have been saying they're going to go up for the last 6 months, and it hasn't happened, and not substantially.
Wow. And how are prices in New Jersey right now for the properties?
Property prices are stabilizing. I don't see too many people overpaying. I've been talking to some realtors that actually had the lower prices on their initial listing because people weren't biting. They were getting ghost town open houses, and nobody was showing up. So I've seen some of that, but it depends in the area. I know where I'm at and where I work primarily, nobody's overpaying anymore. Competition is down.
Wow.
But I also think it's the time of the year. Right now, there's not that much activity on the purchase side, but anything can change. I think that rates being the way it is, I think more people, like younger people, are coming into the market. I think it's just going to continue to be where we're at. Nothing's really going to change for us, I think.
Right. Especially the rents are so high.
Yeah.
So sometimes you end up paying the same for, to rent a property than to pay your own mortgage.
Absolutely. And condos, another thing, people need to look at condos because, I know people are renting, paying, $1,500, and there's condos where the mortgage will come out to like almost $1,000, and they're living better or the same situation except they own it. So people need to really look at home ownership in terms of that. I mean, how much properties do you own? Are you a property? You're an investor, real estate investor, or where are you at with that?
So let me tell you a little bit about that. So I own my home in Miami. Okay, we purchased this home a year ago, and now it's gonna go in the market for selling. Okay. Because we decided to buy another property, a larger property, and the story on that property to get it's what we're dealing with right now over here. So the property that I'm purchasing, was on the market on Friday. Okay, I
Hmm.
called the agent on Friday, the listing agent, the real estate agent. I
Yeah.
called Friday, Saturday, Sunday, Monday, no response. Okay, I emailed, I called, I left messages, I texted them, no response. So Monday, I called the real estate company to make an official complaint because the listing agent wasn't calling me back.
Yeah.
So they said, well, we have multiple offers. We got over 300 phone calls on this property. So I'm sorry, but we're too busy for your offer. Um,
Okay.
so I said, okay, please take my information and call me back if
Yeah.
anything happens with your offer, with your offers. So they said, okay. And I said, well, by the way, I have cash, which it wasn't really the case, because even if
Yeah.
I had the cash, I want to take advantage of the great interest rates that,
Yeah.
your company is offering. So
Yeah.
I,
Yeah.
so,
Yeah.
so they called
You're
me
not
back.
going to use it all.
Right.
Exactly.
So they called me back that night and they
Hmm.
said, well, we have 3 openings available for cash buyers only on Thursday. I said, okay, I'll take it.
Yeah.
And then an hour before the showing, the listing agent called me to say, if you're not offering at least $50,000 above listing price, with no contingencies on appraisal or inspection, and closing no more than 30 days, please don't show up.
Yeah.
So, so my husband said, well, I'm not showing up. And
Yeah.
he hung up.
Of course not. I mean, when was this? This is recently?
This was like 2 weeks ago.
Oh man, maybe Miami's it's still bubbling compared to up
Yes,
here. I think so
yes.
because down up here it's slowing down in terms of that kind of stuff. You're not seeing that much that
Yeah,
craziness anymore.
yeah. No, it's like, I don't know if everyone. Well, a lot of people are coming to Florida. I guess
Yeah,
last year we had 33,000 people from New York coming to Florida to live in Florida.
last year alone.
Last
Yeah,
year alone, yeah. And
yeah,
then
that's
prices,
incredible.
yeah, prices increased tremendously. We had, we're located in Miami, but we also have Broward County and Palm Beach County within
Yeah,
an hour from here.
yeah.
And in the 3 counties, we saw increase of 20-23% on price in the last year. So
But
it's
people probably look at it and go, ah, well, taxes are super cheap down there. So, yeah, I
mm,
mean, it's attractive. It is. Other than the hurricanes, I think Florida is, but that's a short season. Florida is very attractive, especially to people that have been living up here in the cold for so
right,
long.
right.
I almost moved to Florida a couple years ago, but decided not to. But I still kind of want to get a condo and do that kind of stuff, just for traveling purpose. We're looking to set up expand a little bit in Florida as well. I'm looking
So
to
so
probably get my
tell
my license down there,
tell me a
and
little bit about that because I heard something about your company coming to Florida as well.
yes, we've been talking about it. But essentially, I was told, hey, look into getting your license down there in the state of Florida, because I've been working on New York and PA, and they said, hey, throw that one into the pile too. We're looking to maybe expand there in the near future. So don't know much yet, but I know that I'm pursuing Florida because I have some connections down there. I have a family member who's a real estate agent, and you guys are down there, so I feel like it's a good opportunity to expand. The Latino community is exploding in Central Florida, and I think as a lender, I think there's so much opportunity that it's hard not to plant a flag and say, hey, let's expand down there. And of course,
Yeah.
the weather is the weather, so wouldn't mind a couple weeks a year down there for work, where I
For
can just say,
work.
hey, yeah, I'm working, but I'm going also having a beach, I'm going to the beach later at 6, but that it's a different lifestyle that but for business wise I think it's a smart move, and we try to be smart in what we do. So yeah, we're looking to maybe set up an office down there or something like that in the future.
That would be amazing.
Yeah.
And let me tell you that lately I referred someone to your company, and they
Hmm.
were surprised about the difference on interest rate that your
Yeah.
company was able to
Yeah.
offer compared to what we have here.
Yeah, and the reason a lot of people are surprised is because we're a direct lender. We have in-house underwriting, whereas most brokers and mortgage loan originators, different names, same kind of title, but they usually are brokers where they go to different lenders and offer you their rates. So it's not as competitive as somebody who has their own essentially lenders and investors behind them, where they don't have to go out to a different bank. We can go internally, get a loan underwritten, and be more competitive on rate and price up front compared to another lender. But we can also work with all lenders as well. So a lot of times people call me and say, Jose, I got a letter from Chase. I have my mortgage with them. They're offering this rate. Well, normally I can be competitive, or most of the time beat that rate, because of the direct lending that we offer at my company. So that's where I think we're a little different than most lenders that are in the mortgage sphere compared to just the traditional lenders. We have a direct line of credit, and we offer those high rates because of it.
Amazing. I see
Yeah.
that. I recommended the services. And yesterday I did a closing for this real estate agent, and he said, thank you for recommending them. They're
Yep.
amazing. And they were able to offer my client the best rate, because the client was shopping around for rates.
Yeah.
And
I
they
mean,
were able to offer the best.
oh yeah, and the funny part is, you say the shopping around. Everyone does, because we're not just competing against other firms. We're competing against these big firms that have nationwide commercials and marketing material, where they're offering highest rates possible too. So we're competing against national brands on rate, and I think that's spectacular, because we're I wouldn't say a small company, but we're not the nationwide firm where, like, Loan Depot, where they have hundreds of agents, and we offer the same kind of rates they do, in-house, internally. We don't have to shop it around, and your file, your loan stays in one place the whole time. And I think that's unique.
And the customer service, because sometimes I see closings here that they just go online and they find a good interest rate,
Yeah.
but then they never close on time.
Yeah.
And then I have the buyer calling them for for status, and we don't hear back from them for weeks, and then closing date is tomorrow, and no package, no figures, no one to call, 800 numbers. And so
Yeah. It's
customer
the
service.
process is a long, sometimes tricky process, and if you don't have somebody walking you through it the right way, giving you the right information, giving you the right expectations, actually, because some people try to get the deal by saying, hey, yeah, I'll close in 2 weeks. Well, come on, how likely is that, Gina?
It's not realistic.
Not realistic. So I think that's a disservice to a borrower, and we don't like to do that. Up front, depending on the kind of deal it is, the kind of borrower, the kind of situation, we tell them, hey, this could take 45 days or more. This is not an easy situation, but we're going to do our best to do it in a timely manner. So giving them those expectations up front avoids problem later on, where you're in day 30 and they're going, Jose, when are we going to close? Well, hey, look, we talked about this, so they know. And it's educating. It's education. Is this stuff that we're doing, and that's why we're going to continue doing it, because the more educated our borrowers are, the better service we can give them.
Exactly. Especially that the buyers, when you buy a property, you're entering in a legal contract with the seller.
Yep.
And that contract has a deposit, as we mentioned before. It's a good faith deposit. So unless you're working with the right group of professionals in real estate, in financing, in title company, there is a risk of losing your deposit.
Yeah.
Okay? So if you're working with a lender that promise you're going to have a loan approval in 30 days or 25 days, and then you don't hear from them after the 25th day or after the 30th day, whatever your contract says, the seller has a legal right to claim your deposit, because your contract at that point becomes no contingent on financing. So it's
I unfortunately, I've seen it, and I've seen where I had a borrower come to me late, and he said, Jose, I don't know what happened to my guy. Can you try to help me out here? And we couldn't. And he was locked into a contract, and the guy, had bad people helping him. He put a lot of money up front, and he let's just say he had to bite $9,000, I believe, or he close to that. And it's unfortunate, but that's a disservice that was given to him by his first lender, who didn't explain the importance of everything he was doing. What happened was he moved his finances around, and by the time they actually took a look to get his mortgage committed, he couldn't close.
Wow.
And yeah, and it was day 40, and it ended up he had to wait a couple months. They finally closed with another borrower, and they wanted damages. So they came after his money. But that's unfortunate, and it happens. And I think that's the lack of education and the lack of awareness of that lender who just misguided that person.
Right, right. That's why it's important. Or if
Mhm.
you're not going to be ready on time, because things happen, and I understand appraisals are taking a little longer than before, correct? Because of the volume, or you don't see that happening.
Yeah, I think. Well, I had recently an appraiser come out. It's maybe from my experience, it's maybe 7 days now. It was a lot worse a couple months back. So it's getting better. Like I said, this storm just puts everything in the loop up here in North Jersey. But I know I requested an appraiser. He was out in 7 days,
Okay,
which to me, compared to what I've been dealing with the last few months, is a miracle.
fast,
So
right?
yeah, it's getting better. It also depends on the kind of loan you have. I seen a VA guy take longer than an FHA guy. So it depends on the
Mm,
kind of appraiser and that person. But generally, 7 to 10 days is what I'm estimating for an appraiser nowadays. And even
okay.
when we order inspections,
And
um,
then they will take just a few more days for the results.
the reports usually are 48 hours. Within
Oh, that's
48
wonderful.
hours, yeah, sometimes quicker. If it's a simple one where the house doesn't need much things or anything done to it, they do it generally really quick. It also depends on the type of house, because if they have to get different variable comps and they have to look at different unique house, they can't just comp it with anything. So it really depends. But yeah, 7 to 10 days. The turnaround is usually 48 to 72 hours on the report. But I'm seeing a lot of subject to stuff going on with a bunch of my purchases where properties need extra work, especially government loans. They take a deeper look at the properties. So for
Right.
you sellers out there, if you want your transactions to close quickly, have your property ready to go. Have the bathrooms done, have the home livable, because if not, you're gonna have to do it anyway, and it's just gonna slow down your closing. Like I'm seeing two of my four closings getting slowed down because of subject to stuff, which couldn't have been avoided if the seller up front was taking care of that property before you listed it. So for you sellers, if you want to close faster, take care of your property, make sure it's ready to go and sell.
Jose, so what kind of things do you see that the lender will require the owner to fix?
Okay, so
Give me like 2 or 3 examples so I know.
I'll give you some examples that I'm dealing with too. I'm dealing with two properties now. One of them, it was peeling paint all over the second floor, and I guess it was an older type of paint that maybe had some chemicals in it. I don't know, but the appraiser said that peeling paint has to be rubbed off and it has to be freshly coated. So peeling
Mm,
paint, anything like that, but that's around living space where people breathe air. So walls, ceilings that are hanging and stuff like that, they're not going to accept that. You're going to have to fix that. Broken walls. I mean, a couple nails here and there, no big deal, but you can't have open walls in a
of
home
course.
and expect it to sell, and a lender attach a commitment to it. It's not going to happen. Other things like obviously rooftops. I think I mentioned ceilings, foyers. If you have living space foyers and stuff like that, the floors have to be done. They can't be broken. Essentially, the idea is that house. If somebody wanted to move in tomorrow, they can without having to do any major work.
Okay.
The other home, they had a bathroom but didn't have a toilet set up in it. But they listed the home as two bathrooms. So the appraiser said, "Look, get this bathroom
That's not.
operational."
Mm,
So something like that, where and the appraisers there is for two reasons: to establish a price point and also to protect the borrower so he doesn't get screwed, and the seller so he doesn't get screwed. On the negotiation, overpaying, underpaying, et cetera, et cetera. But really, it's the baseline of the price and to assure that the borrower is buying a home that's livable. Now,
Right.
if he's buying a house as is and everything's as is on the contract, then the appraiser doesn't care. He just establishes the price and he doesn't write anything subject to because it doesn't matter. But when a home like a VA loan or FHA loan that somebody's occupying is an owner occupier for whatever term it is, the house has to be livable from day one.
Okay.
So if you list two bathrooms, have two bathrooms. If you let's say you have a you know uh, a basement apartment, well, you can't list it as a basement apartment. The appraiser is going to come. You have to make it look like it's a basement. Little things like that, because he's going to say subject to basement needs to be a basement.
Mhm.
It is what it is. They're going by the book when they do an appraisal. And what happens is once he puts subject to, you can't close until those things are taken care of.
Got it.
So, the realtor, I'm dealing with one where the realtors are great. These are two great guys. They've been in communication with the appraiser saying, hey, let me know. We're working on it with the seller, taking pictures, sending it to the appraisal, making sure that the appraisal knows that, that stuff is getting done. He's coming back next week to appraise it. And then once he gives a seal of approval, the lender will commit to the loan and we can set a closing date. So, it's very important that the sellers and the borrowers need to understand subject to things when you're living in this home. Now,
Right.
again, there's a difference. If you're buying it and just flipping it, then that doesn't matter because you're buying it as is.
Right. Right. There's a lot of things that happened in every transaction that maybe buyers or sellers don't realize from
Yeah.
the beginning, but there's a lot of factors, a lot of people involved in and then
Yeah.
the delays, sometimes for the lender, like as you're explaining, maybe if you promise 30, 45 days of closing, but this is
Yeah.
happening, so you're not able to
Yeah.
close on time.
And that's why we usually give conservative estimates. We have to because we never know. It's and my borrowers are completely educated. They know what's going on, so they're not calling me, Jose, it's your fault. They literally like, hey, Jose, what do we got to do? And I go, hey, if you want, I could go help you paint. But it comes a matter of we have to get this done,
Right.
and sometimes it's out of your realtor's hand, it's out of your lender's hand. It's just the luck of the draw, or maybe like I had a borrower, the seller said, hey, I'm not fixing anything. The borrower wants the house really bad, so he said, hey, he called the guy, he said, can you give me the keys, I'll go fix it myself. And they're doing it. So
Wow.
it's I told the guy, I said, hey, Mr. Borrower, if you want to close, let's get it done, man, I'll go help you. And he understands that, so it's like he not closing on him. But really, guys, the idea is that we never know. And these things happen. Like we could have closed a week ago if there was no subject to items. The
Right.
appraiser came in, set the price, everything was copacetic, and we would have moved on, closing by now. But this is the business we're in, and these procedures are there to protect you. Really, it's to protect you.
So what would you recommend to the realtors on the contracts, to give 45 days or 60 days for the closing, or what's your recommendation?
The problem I see, I recommend 45 to 60. The problem is that the selling agents, when they go out, I look at it from their point of view. A listing agent is got that lister that property because he told them, hey, I'm going to sell your house quick. I'm going to get this done quick. So he's tied into, I want to close in 30 days. The borrower's representative, the borrower's real estate agent, he more or less kind of works with me, so he understands, hey, Mr. Borrower, this is going to take 2 months possibly, but the problem is that listing agent's going to want to stick to that 30-day, which is in
They're
New
gonna
Jersey
put
pretty standard.
30 days. Yeah.
Yeah, so what I see more than anything is we go to the lawyers and get an extension every 30 days. That's the only option we have. Both sides understand that. I wish they would be more understanding and let us go from 45, but I think the listings agents, because the way they get business, have to be aggressive on that 30-day close.
Right.
And I think that's where the
Which
disconnect is.
usually doesn't happen for one reason
No.
or
I mean,
the other.
it's tough getting 30-day close on refis. I mean, to be honest, it guys, we went through a global pandemic. We're just recovering. Things are not even back to normal, so everything takes time. Everything takes a little longer,
Yeah.
and I don't even tell 45 days anymore. I say 2 months just from day one. So if it happens before 2 months, we all look like heroes, and we all look great. But who knows? These transactions take time. It's just what it is,
Yeah,
and they're tricky.
they are.
Yeah.
And every transaction is different, and you learn something
Yes.
new in every
Yeah.
transaction.
Yeah, I was talking with one of my coworkers who helps me process loans, and 2 weeks ago when we started these two files I'm mentioning, we started these two files. I go, oh, this one's gonna be not so bad, and this one's gonna be pretty easy, and they're both tough ones, and it just the way of the mortgage industry. The good thing is that there's so many good opportunities for people who can never buy a home to buy a home now with all the assistance that's available. Government programs are coming. You should buy a property. There's no reason you shouldn't, unless obviously if you're struggling financially. But work with somebody on credit. That's very important. Work with a lender early on to get you ready to buy a home, because I'm telling you, the benefits of it over renting is substantial.
Definitely, definitely. And sometimes people think it's harder than what it really is. Sometimes I see it with a family member this week. I have been after my cousin for years,
Yeah.
telling her, when are you going to buy a property? When are you going to buy a property? And she was just under the impression that buying a property was something impossible for her.
Yeah.
And I said, no, just check with a mortgage consultant.
Yeah.
So even if you're not ready, you can start taking the
Mm-hmm.
right steps to be ready in
Yeah.
the near future. And that's exactly what she did. And she qualifies for a loan. So
Of
she's now
course.
looking for a property.
Yeah.
So, sometimes you don't need perfect credit. You don't need
Yeah.
perfect income. I will, everyone that is listening, I will invite you to consult with a mortgage professional. So if you're not ready, they can give you they can
Yeah.
guide you to be ready in the near future.
Yeah, and a lot of people like your cousin think, oh, I gotta have $100,000 to buy. You really don't. The average property in New Jersey goes from 300 to $400,000. One family homes. 3.5% of that. It's not $1 million. So there's also assistance to help you with that down payment. But regardless, I always ask somebody up front. I ask them, what are your assets like? When I'm qualifying them, they go, oh, I only have 40. And I'll go, wait, what? You're worried? You have, maybe your price range isn't 600 now, but you can buy a nice home for, that, and still have a lot to spare. But the important part is that, people need to understand that down payment isn't a loss. It's not like you're putting it and throwing it away. That's equity. That you can get that back one day. You treat your mortgage properly. You go through it. Maybe you live in your home for 5 years. You gain that equity, and you can borrow it back, and you can gain that back. Or when you sell, you gain that back.
Of course.
So that's what I always try to tell people up front. The down payment. Oh, it's not money thrown in the garbage. That's an
Definitely.
investment that's
Definitely.
holding that whatever $100,000 loan that you invested in. It's almost a good faith. It's a good faith. It's like they're holding that because they give you this, but you can get that back, and you will if you play it smart and you have a plan.
So this 3.5 down, that's for an FHA loan,
Mm-hmm.
right?
Yes.
And then what's the credit score?
Right now it's changing, but usually, to get good in the good FHA programs, it's 620 and up. People on FHA themselves will say 580 and up, but when you get a credit or when you get qualified for a mortgage, we run your credit, so you're gonna get a hit in that point eventually when you're shopping for your mortgage. So we want to make sure that that hit won't put you out of qualifying. So that's why 620 for us is our limit, because even if we get you a hit at 620, you're not going too low where you're not going to be able to borrow with FHA. You might take a 10-point hit, but you'll still be at 608 or 610 instead of
You're
you're at
still
580, you take a hit, now you're 560. You know what I'm saying? So for us, 620 is where we like to start. If but don't, if you're 580, don't worry. We work to get you 620. That's our job as
Which is
well.
not hard at all to
No,
bring it to 620.
no,
You know?
no.
So
It's
we're not
really
talking
not,
about perfect credit, 800, 700, 620.
yeah, 620 is not unthinkable, but there's people who for times they don't see it, but it's,
Mhm.
get 3 credit cards, $300 limit, and treat them good for a year. You're going to be at 700. Just, it's these concepts that most people are not taught, I think, Gina, and
Right.
and that's where I wish more people would look at these videos, and I wish more people would get educated, or maybe they need to teach this in high school. Who knows? But the idea is, it's as simple as getting to 620, and you qualify for a home. And I know
Wow.
people who have great jobs, but they have not great credit. They're just not good money managers. And I'm like, guy, dude, you can get a house. Let me work. And I did one recently where he was a 540 and but making great money. And I'm like, where's the disconnect? And then we looked at his credit. He only had one trade line, one. And I go, you're a newborn baby. Oh my God. Like, it was, for me, it was almost a project for me, because I knew exactly how to get him to 750 plus. And we did it. And in 4 months, he was at 760. And we opened up a finger hut account. He bought a pair of sneakers once a month. We got him 2 credit cards. We got his rent on, self credit. And then 4 months later, he's buying a house. But it's because he didn't know.
Amazing.
And and,
It's
and
it's the lack of information and
yeah,
education.
yep.
I was having this conversation with a friend from high school very recently because um, most of my friends from high school used, my services for title
Yeah.
um, in real estate. So I try to be like a real estate concierge. Okay, so if
Yeah.
you're looking to buy a property, I can refer you to a real
Hmm.
estate professional. If you're looking to refinance, then I will refer you to someone like you that will
Gotcha.
refinance the property. So um, some of my friends, like the money you're able to make in real estate is,
Hmm.
it's going to be very hard to make it by saving money out of your paycheck.
Hmm.
So I have seen for the last 10 years, people buying a property and then it goes up in value 100 200 thousand dollars.
Hmm.
When are you going to be able to save $200,000 in a few years from your paychecks?
It's never
It's
gonna
not
happen.
easy, right? It's
Yeah,
not easy.
yeah,
So, do you do investment loans as well?
we do. Investment loans. We do it traditional, conventional investment loans, but we also have brokered loans, which means they're non-traditional mortgage products for specifically for businesses and for commercial use. So we have both routes. The conventional usually it's 20% down. I think, did we lose you? You still there, Gina? We might have lost her. I think we lost Gina for a second. Let's see if she's coming. She's gonna come back. Let's give her a second here. No, I want to keep going, but I think she just texted me, and I just want to make sure she's here. Ah, Gina, there you are.
Sure.
There you are. Okay, no, no. What we were on conventional, right? Conventional investment loans.
Investment loans.
Gotcha. Yeah, so we have conventional investment loans. They usually normally start at 20% down. And investment loans are generally any loan that you buy that's for the purposes of renting out or multiple properties. So if it's a 1 to 4 family and you want to buy a conventional investment, that means you're not going to live there. You're going to rent out every unit. That normally starts at 20%. But that's why I always like to mention the FHA 3.5 multifamily loan, because that one you're supposed to live in the home. You have to live in and occupy the home for a year. But you can buy a multifamily home, live in the first floor, rent out the second floor, have that pay a mortgage, and after a certain amount of time, you can move out, rent out the first floor. Now you have a complete investment property.
Wow.
So I think that's the best and most direct way for home ownership and investing. And I see normally that's how people get started. They buy a 2-family, live in the first family for a couple years, refinance out into a conventional loan, and once they do that, they can rent out the whole property without, essentially messing up their mortgage, because FHA loans usually you have to live in there for a certain amount of time before you can, move out and rent it out. So that's the best way for somebody to become an instant, investor. FHA, do that, move out. Then you get into the second one, have that first mortgage, that first property kind of pay for your second mortgage, and then just keep doing that over and over. And before you know it, you'll have 3 or 4 properties. And that's what I've seen from the people that I'm trying to be like and trying to emulate in the business. They started with FHA and they just move on and continue like that. We also have loans for people who have companies, so or commission based, who are don't have traditional means of proving their income, like a W-2, or don't get paid a salary. We have programs for that where you use 2 years of your tax returns to qualify your income. We have many different kind of programs for any kind of investor, really. But the point is, again, we're a direct lender. And for those big investment loans, I'm doing one right now for an 8-unit property in Union City. And we're doing a complete complete broker, non-traditional loan where we use that company's finances to qualify them. So that person's CEO own 95% of the company. We use her finance to finance or to get them qualified. So 8 people are buying this property, but we're only using somebody's income. So it's kind of a cool way to do it where, as a group, you can buy. And this is one family buying this big property, and that's their big investment project. And it's pretty cool to see,
Amazing. So is it fair to say that you will have an option for everyone, right?
Yeah, I think so. That is one of our goals, to be able to service or at least provide and offer service to any kind of borrower, whether it's commercial, whether it's residential, whether it's business, or whether it's just an individual looking to invest and buy properties. Which I see most of the time, that's how it is. If somebody has 5-6 properties and maybe they inherited one and they use that equity to buy another one, we see that a lot. And I have a couple borrowers who do that all the time.
Right.
Yep. But yeah, I mean, we've been on for an hour. It's been a great talk. Maybe we can do something a little bit more specific. But any events that your company's throwing in the next 2 weeks, maybe that you want to mention before we go?
I know we have one on November 4th. But I don't have the details of it.
Okay.
Share it with you.
Okay, no problem.
You and your team can come.
Yeah, absolutely. Whoever's watching, we have Gina's information in the description on both of our videos. Her website's there. It's newworldtitle.com /team/Gina Salcedo. I'm going to pull it up on the screen, but for you guys to view. But thank you so much, Gina, for being on with us and taking the time out today to do this with us. We really appreciate it.
No, thank you very much for the opportunity. And just as a reminder, when you buy a property, buyer gets to elect the title company. And same thing when you refinance. If you're refinancing a property, you have the right to select your title company as well. So I'm here to help. Anything you need, my information is on the screen. We're in Florida, we're in New Jersey, we're also in New York, and very soon we're going to be in Pennsylvania and Texas. So thank you so much for this opportunity, Jose. Hopefully I can continue to refer some business your way. I know you guys are wonderful, and I hear great, comments and reviews about your service. So thank you very much.
I appreciate it. Thank you so much for having for being on tonight, Gina.
All
Thank
right.
you. Have
Thank
a
you.
great night.
Thank you. Bye bye.
Bye bye. Okay, everyone. Thank you for watching. If you have mortgage related questions, you can text me at any time. 908-247-1237. Again, 908-247-1237. It was a I think this is the second longest session we've had, so there was a good one. We covered a lot, and we got some great bits for you guys. I'm gonna have this cut up into some sections so we can share on social media in the next couple of days, and I'm sure Gina will have some of this stuff for her as well. And yeah, stay tuned for next week. We are probably doing two. We're gonna be doing a real estate agent again, and we also will be doing a mortgage rep from within my company to talk about not only what just happened with the storm, the effect of it on our market, and maybe the effects of it in terms of rate and market activity moving forward. Thanks for watching. You guys have a great night, and I appreciate whoever is watching and have watched tonight. Thank you. Have a great night.